Hello, everyone. Welcome to the Gold and Silver Club end of week review for the 18th of July 2014. Again, guys, we're just doing a quick sound check. Make sure you can hear me loud and clear, and we will get cracking. Okay, fantastic. Right, so we've got quite a lot to cover on today's webinar. So today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will, of course, be covering a end of week summary for the commodities markets. We'll look at the top trades of the week. We'll cover live market commentary and technical analysis. We'll look at the week ahead, so the key events looking forward. And, of course, we'll be covering any questions you may have on today's call. So gold rallies on safe haven demand amid the Malaysian plane crash uncertainty. So we saw yesterday gold price surged after the Malaysian airline passenger jet crash near the border of Ukraine and Russia. Gold, a safe haven in times of uncertainty, actually soared on reports that the Malaysian airline, which was carrying 295 passengers, had been shot down by pro-Moscow rebels in the region. The crash came a day after the US and European slapped new and tough sanctions on Russia following the annexation of Crimea in April and ongoing tensions in the rest of Ukraine. The new sanctions are considered to be the largest round of penalties so far. The precious metals also found support on Thursday after Israel announced the start of a ground campaign in Gaza after 10 days of aerial and naval bombardments failed to stop the Palestinian rocket attacks. So elsewhere in the markets, precious metal prices were boosted by increased demand in the world's two biggest consumers, China and India. Reports this week highlighted India, which is the world's second largest bullion buyer, speeded up imports in June by 65%, with shipments rising to 3.12 billion, up from 1.89 billion registered in the same month of the previous year. So this news certainly helped drive the gold price higher after a sharp decline on Wednesday following comments from the Federal Reserve hinting interest rates could rise sooner than previously expected. Okay, so we go into the technicals very shortly. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading, and prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. Right, so let's take a look at the price of gold right now. We're currently trading at $1,309 per ounce. So we'll take a look at the technicals very shortly. Before we do so, just cover the top trades of the week using the Gold and Silver Club signature trading strategies. So these are as follows. So first of all, we had gold breakout yesterday. So we had a lovely move on this. We broke out from the 1304 level. We actually spiked up to 1324. So a lovely 200-point move on that. The risk on the trade was 65 points for each lot traded, so $650 for each lot, for a profit of $200 for a 3-to-1 on yesterday's breakout. We also had a lovely breakout on the Palladium markets yesterday, so we broke out finally of that key resistance zone. The risk on the trade was 65 points for each lot traded, so we made a risk there of $650 for a profit of 125 points, so $1,250 for each lot traded, for a 2-to-1. And finally, we had natural gas, which also broke down on the inventories yesterday. The risk on the trade was 60 points for each lot traded, so $600 risk for a profit of 120 points, so $1,200 profit for a 2-to-1 on natural gas. So those are three top trades of the week, and we'll take a look at the technicals now. So just move over to live market technical analysis, or we'll just switch it over to my screens for you. Okay, so the first market we shall take a look at, we are looking at natural gas. So what we've seen over this week is we had a consolidation for much of this week until yesterday, and we finally broke lower. So we were finding support at the 4.080 level here. You can see we've been ricocheting really off that support all week, and we finally broke down yesterday. This was helped along in the afternoon by the natural gas storage inventories. You can see here we had a nice pop down, about 120 points to the downside. We found support around the 3.955 level at the moment. Natural gas, in terms of all its key moving averages and other key technicals, has actually come down to a key support here. If you go back in the chart to the 14th of January, this was a support zone. It was a previous resistance for natural gas going into October 2013. We found support at this level in December 2013. January 2013. So we've actually come down and hit our profit target here. So for those of you who were on last week's webinar, you will recall we did discuss this as the next major level that we would be targeting. So we're very happy to see that natural gas did just follow through, and it's come down all the way to that major support zone. So we're looking at this as an event area now in that gas to see whether we will get a further breakdown. So in order to break down further here, we'd like to see the market just come down, and let's just show you this visually. We'd like to see the market either get a break of 3.955 here, and in which case we'll be looking at the next major support zone, which will be below, coming down to circa around the 3.870 level. You can see this provided support just going back to March 2013. I do think at the moment we do have a key event area here, which we could see some sort of a bounce back up to the 4.080 area where we previously found support last week. So we are in an event area here. We've come down, we've hit our profit target, and we are waiting for the next move here on natural gas. Okay, so if you do have sell shorts on at the moment, I would look at this as a potential take profit zone for nat gas at the moment. There is a key Fibonacci level just below this as well where we could see the market sell off to, but for the time being, we've hit our profit target. If we take a look at, we'll move over to oil. So if we look at light sweet crude oil here, light sweet crude oil had a really nice bounce last week. We came down, bounced off the 99 level. You can see that provided a lot of strong support going back on the chart into April 2014, March 2014, support going back to February as well, and also resistance in December 2013. This we did get a capitulation earlier on in the week. On Tuesday, you can see a nice bounce off the 99 level. That got confirmed to the upside, a break above the 101 level here. You can see this really produced a decent move in the region of about 270 points. So we've had a really nice reversal, a very key level of support here for light sweet crude oil, and we've got a nice V-shaped reversal pattern which has started to develop here as well. So as we go into next week, I'd like to see whether we are going to get a break above this week's highs here and just come back to the upper end of this resistance channel, and if we can just follow through. But that support zone at 99 held fantastically. You can see the amount of times that has been tested so far this year. If we move over to Brent crude oil, very similar situation. We came down to a major support zone at the 105.50 level. You can see we've bounced off this key support zone going back to October 2013, January 2013, February as well, and also March and April. Again, we provided support just this week at the 105.50 level. It's not been such a good move as WTI crude oil, but it's still been a decent bounce from that support zone. And we would expect further upside here as well, particularly if we continue to see upside with WTI crude oil. We've got quite a lot of upside here potentially. If we just flip it over to the weekly, you can see here a nice hammer on the weekly time frame as well, which is starting to develop right at the 105.50 key level of support. So I'll be watching that as we go into next week and see if we are going to get a rotation higher here for Brent as well. So I think that's definitely one of the top picks to look at as we go into next week. The grains have been very good this week as well. We've seen some nice rotations. Certainly yesterday we saw a rotation back to this resistance zone on wheat here. If you just draw in very simply a nice trend channel on wheat. You can see we spiked up to this key level yesterday, and we're just starting to sell off from that again today. So we're in a very strong downward trend at the moment on the wheat market. You can see already today we're starting to sell off from that retracement. So we got a big spike in the afternoon on the wheat price. Around the same time, we saw the spike to the upside on gold as well. We saw that affect both corn, wheat, of course, which are major. Ukraine and Russia being major producers of wheat and corn, so they were affected by the news of the plane crash yesterday, and we saw a big surge in those prices. But that's very quickly retraced. Gold's retraced also today. It's about 100 points off its daily high yesterday. We'll take a look at gold very shortly, but I think we could get further downside here on wheat and just come back down to this downward trending channel. So I'll be looking out for that. For wheat, we're looking for, well, we've got sell short positions on this already, but we're looking for more downside here and to come down and retake out the key level of support at 522.82. It's a very similar situation with corn. Corn got a nice spike yesterday and then produced an inverse hammer on the daily. You can see we've got a decent level of consolidation here on the corn market as well. So essentially, we are looking just to break lower again, break through the 370 level. And you can see corn did break through major support so far over the last couple of weeks into the end of June and beginning of July. We've broken down severely on corn. We are looking for more downside, very strong downward trending channel that we've got here on the corn market as well. So we're looking for a break now of 370.50 just to continue with this downward trend. So again, nice spike to the upside yesterday and offered a better opportunity to get in for a short. Same situation with wheat. If we just take a look at actually the US dollar index is one to watch at the moment. US dollar index is starting to run out of steam a little bit here. We had an inverse hammer produced on yesterday's daily candle. We'll be interested to see whether the US dollar index will be able to maintain its current upward trend that it's been in over the last couple of weeks here now. We've been forming an upward trending channel. Okay, so this upward trending channel, which is starting to form, has been in place since about the 26th of June here. But we are at the resistance zone of this upward trending channel. So I would be interested to see if we do get a pullback and a reversal again to the lower end of the trend channel, that will be supportive for gold here. So we did put some pressure on gold overnight, had a nice spike yesterday in the afternoon on the safe haven buy. And with that, we'll just take a look at gold and how gold is moving at the moment. So here's a spike that we got yesterday. 1304 up to 1324, a 200-point move, which we were automatically triggered into. You can see on the daily candle today, we did pull back slightly after night. There's been some profit taking there. We've not quite come down to the lows of yesterday to the 1304 level, so it may be a temporary pullback. We just break it down to the 4 hour. We are getting a little bit of support here as well. You can see there's a bit of a trend channel starting to form here. So we'll see whether gold does get supported and whether we get a retest of yesterday's highs here. But gold hasn't completely given back all of the gains from yesterday, currently sitting around the 1311 mark at the moment. So what I'd be looking at for gold here is just to really hold on to some of the gains from yesterday, not to come back and break below 1304. So it needs to really stay above the 1305 level. If we can close near the weekly highs for gold around 1324, it looks bullish as we go into next week. So we'll be keeping an eye on that. In fact, if I just draw it out and put it on another time frame here for you, you can see actually where this, we've got a trend channel which has been supportive for gold at the moment at the 1291 levels where we came down. That was a very key level of support this week. We've got some key indicators, moving averages all around that key level, which did get supported at the 1291. And if we can close around about the 1324 today, or 1315 to 1324, that bodes well as we go into next week for gold. You can also see there's a bit of a reversal starting to form here, starting to get a V-shaped reversal pattern on the weekly here as well. So we'll be keeping an eye out for that for gold. A little bit muted at the moment during the UK session, but the US session we should see more volatility. If we look over silver, very similar situation. Silver got a big spike yesterday on the safe haven demand as well, a spike through the 2082 level, and just came up here and spiked up to 2122, so about 40-point move to the upside. We've given back quite a lot of those gains. It's retraced, but it hasn't quite come back down to the lows of Tuesday here at 2082. So we're back within this consolidation zone on silver. Silver's still building a base and holding on to the gains from the FOMC breakout that we got from $20 to $21 an ounce. So we're right back up around those levels, around just shy of $21 an ounce. So silver doing well to hold on to its gains. Still, you can see as well on the weekly here, we're getting a nice hammer forming as well. So I'll be interested to see again how silver can close, if it can hold on to the gains from this week. Palladium did get a breakout to the upside yesterday. Palladium broke out to 13-year highs. The 875 level, we did get a nice breakout from that level. We moved on the high of that spike, circa 120 points to the upside. Again, we've had quite a lot of profit taking, but we are finding support again at that previous resistance zone is becoming potentially new support here as well at the 875 level. So Palladium, we do see more upside here in Palladium. It's had a fantastic run over June and July so far, and we still haven't given back all the gains from yesterday's move. So we're holding on to around that 875 level, which was the breakout zone from yesterday. So very keen to see how Palladium is going to close this week. And you can see very strong upward trend channel. We've got some a nice consolidation after we broke out from the 860 zone, consolidated up to the 875. So what I would expect to see here is potentially we are now going to form another consolidation zone with the 875 level providing a new level of support, and then we should get another breakout to the upside. That's what I would be looking at here for Palladium. If we look at Platinum also, we did get a bit of we got a nice surge yesterday, and we've had a pullback back to the support zone at 1487. If you're just having a look, again, just going out to the trend lines here, you can see that we have had some supportive bounces here, and we are still staying within this very strong upward trending channel. So we are getting a bit of a pullback today, might offer a better entry price in order to get long as we go into August seasonality here. So the metals still looking strong, holding on to a lot of their gains. Let's just finally we'll look at the copper market. Copper, we've got a very strong previous level of resistance going back to May 2014. Okay, if you just take a look at that just a couple of months ago, and that previous resistance is providing new support. We were overdue a bit of a pullback here on copper. You can see 3.1961 is providing support for the time being. Previous resistance becoming support at the moment. And again, if we can hold, I'll be looking for the correlations here. If gold holds onto its gains for the week, we should see that follow through, certainly with platinum, palladium, and copper as well. And US dollar index, I'll be keeping an eye on that today to see whether we are going to see a bit of a pullback from this resistance channel. For me, the top picks of the day at the moment are going to be wheat and corn at the moment. From the spike that they had yesterday, I would be looking at these for nice sell short opportunities at the moment. So particularly wheat came up to a nice spike yesterday from the safe haven buy, but you can see very quickly it's starting to give back its gains at the moment. Okay, so if I just break it into another time frame, you can see that a little bit more clearly. Very strong downward trending channel here, and I would say you can see it's already starting to sell off. I'd be looking for more downside here for wheat. So wheat is the top pick of the morning, I would say, at the moment until we go into the US session. So with that, let's take a look at the key news announcements for the week ahead. So those are Monday, the 21st of July at 1:30 p.m. BST, 8:30 a.m. Eastern time. We have the Chicago Fed National Activity. So the monthly report by the Chicago Federal Reserve Bank tracks economic activity in the 7th district, which is comprised of Indiana, Illinois, Michigan, Wisconsin, and the index is useful in tracking economic growth and identifying potential inflation. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Tuesday, the 22nd of July at 1:30 p.m. BST, 8:30 a.m. Eastern time, we have the US core CPI. The core consumer price index CPI measures the change in the price of goods and services, excluding food and energy. The CPI measures price change from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Tuesday, the 22nd of July at 3 p.m. BST, 10 a.m. Eastern time, we have the US existing home sales. That report measures the change in the annualized number of existing residential buildings that were sold during the previous month. That report does help to gauge the strength of the US housing market, and it's a key indicator of overall economic strength. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish, which will inversely be correlated to gold and silver. Wednesday, the 23rd of July at 3:30 p.m. BST, 10:30 p.m. Eastern Time, we have the US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. Thursday, the 24th of July at 1:30 p.m. BST, 8:30 p.m. Eastern Time, we have the US initial jobless claims. Now, that data measures the number of individuals who filed for unemployment insurance for the first time during the past week. It is the earliest US economic data. Week-to-week numbers can, of course, be volatile. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And finally, on Thursday, the 24th of July at 3:30 p.m. BST, 10:30 p.m. Eastern Time, we, of course, have the US natural gas storage report. The Energy Information Administration, the EIA, natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So we had that yesterday, and we immediately saw a lovely sell-off on that, continuation of the downward trend, which gave us a 120-point move. So it's well worth keeping an eye on this announcement every week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. Okay, so those are 6 major news announcements we need to be aware of as we go into next week. And of course, if you would like to take your trading to the next level with commodities, you can request more information on the Gold and Silver Club live trading room program or daily trade calls. Just go to www.jointhegoldandsilverclub.com. You can contact us at our London, New York, Johannesburg, Budapest or Hong Kong office. I will leave the numbers on the screen for you shortly. And make sure you subscribe to our newsletter. You'll receive free weekly reports on the precious metals, energies, agriculture, live market analysis, and of course, prices. Right, so that is it for today's session, everyone. So good luck for today's trading. Have a great weekend, and we'll catch you back here same time next week, okay? And I'll leave those details on the screen for those of you who would like to take your commodities trading to the next level. Okay, take care, everyone, and we'll see you on the next one. Cheers. Bye-bye.